Good morning, everyone. I am Bosin Amafayo of Frontier Africa Reports. Let's get today's opening bell started with my team of panelists. Today is Tuesday, the 9th of June. But let me just take you quickly through our panelists. Thank you very much, Ayode Jebo, the CEO I want to get everybody into Frontier Africa Reports. Afrinvest, there is a bit of a similarity. The Afrinvest Securities. Ayode Jebo, thank you very much. Ayode is joining us from Lagos here in Nigeria. Thank you very much for coming. Ali is, as always, the man sitting down in Nairobi for us. He has a lot on his breakfast plate this morning. Thank you, Ali Khan Sachu, who is of Rich Frontiers Management Limited. And of course, Uchenna Menes is always keeping one permanent eye on the global space for us, covering FX and commodities and everything else in between. Uchenna is the managing partner and FX trader at Blue FX Nigeria. Good morning, gentlemen. Thank you very much for coming through on the show. But quickly, let's take you through a quick roundup of yesterday's market across the continent. On the equity side, Nigerian bourse started Monday on a positive note, ramping up nearly 1%. The Ivorian market, the BRVM composite, was down less than 0.1%. The Egyptian market was up 0.34%. Egyptian stock market is still about a 20% negative reading year to date. So the Egyptian stock market is still one of the underperforming on the continent since the new year started. The Kenyan market, 1.12%, 140.74 reading on the all-share index on Monday. A very big day today for the Kenyan market. We'll get to that in a few seconds. South African GSE softens are about the same margin as the BRVM, the regional exchange here in West Africa. So what's the big story today on the Kenyan market? We need to move on very quickly. The Nairobi Securities Exchange PLC this morning launched a new mobile app going digital, trying to get new investors who are younger into the market. According to some reports, the average age of investors in the Kenyan stock market about 52, 57. That's what Ali will be talking to us about. On the corporate side, there are quite a number of issues. A Centrum Investment says it's repaying 6.6 billion Kenyan shillings in outstanding of its bonds ahead of due date. Kenya CIC Insurance appoints a new CEO, Patrick Nyaga. Meantime, there are other news around virtual annual general meetings, which the Kenya Capital Markets Authority, the CMA, is issuing a new guideline. That's a quick roundup of the East African markets. Uganda has cut its interest rate to 7%. Meantime, Tanzania's inflation eases to 3.2% in May. Earnings still on the street in Rwanda. One of the big banks, the Bank of Kigali, says it loses about 18% of its stock value in May. But let's just start from Kenya, where the big story is currently going on. Ali, coming here on this big day, the NSE PLC event is ongoing as we speak.
So basically, the Nairobi Securities Exchange launched a digital trading app this morning, trying to create a channel into that demographic dividend we talk a lot about, which is the very youthful Kenyan population. The Securities Exchange launched it with a lot of fanfare. The Cabinet Secretary for ICT, Joe Macheru, was attending. And I think the intention is to try and spark interest amongst what is considered a left-behind investor niche. That's young people, the under 30s, under 35s, more interested in schemes, cryptocurrency trading, which is lifted off if you look at Bitcoin, for example. So I think the Securities Exchange is targeting them. The issue really is around the underperformance of the stock market. Kenya, under a previous president, Kibaki, had a very progressive privatization program. We haven't seen a single privatization for about a decade. The listings we've had have not really stirred interest. So I think that this is a good step, but there are other steps that need to be taken. Those steps being encouraging new listings, encouraging, and that will of itself encourage investors in. Just to give you an example, Safaricom in 2008 brought in 2 million new investors with that listing. So just to give you a comparable of what can happen if they get it right.
Interesting, Ali. I remember the Kibaki's administration in Kenya. I was there in November 2004 when he signed the first memorandum of understanding for the regional exchanges between Uganda, Tanzania, and Kenya. I remember that event very well. It was the ASEA's annual conference for 2004. I agree with you. President Kibaki did a lot of privatization and tried to get investors into the Kenyan market. And I think that sort of opened the window for a broader East African markets that Kenya market. Kenya has now represent as a gateway to the east and in a bit of the northern corridor of the continent. But I'm sure what is happening today is what is happening in Nigeria. So just before you talk a little bit more about some of the corporate news, the CIC, the Centum Investment, and Longhorn Limited, Ayodeji Ebo is the CEO at Afrinvest. Ayodeji, I'm sure in Nigeria, we've gone the digital route. We've seen a number of steps such as we've been taken today by the Kenyan Nairobi Securities Exchange here in our own market. 1 minute.
Yes, yes, it's very interesting to see it spread across Africa. In Nigeria here, we've seen that change, especially we've been able to penetrate the younger ones. We all know most people are on their mobiles now, and so in terms of trading, we know a lot of young guys trade FX though a lot of them don't also understand how it works, but we've seen that interest. So with that, having the ability to trade, monitor your portfolio on your mobile, it's something that has really worked here in Nigeria. We've also noticed for even our clients at Afrinvest, close to 70% of the clients trade via the mobile app than even the web portal. And that has really helped because you are able to, they are able to view the market before they take decisions. They don't just give you mandates with price limits. And that has really helped. And I feel it's also changing the market. And that also, you are able to integrate, currently, you're able to integrate other markets into the mobile app such that they have a view of what is happening even beyond Nigeria. And I know with what is also happening in Kenya, there would also be a chance that the Kenya market can integrate its market with, you can integrate your mobile app with that of Kenya, and Kenya can also integrate and give access to Kenya, giving access to Nigeria. With that synergy, I feel that with that, once the regulators are beginning to see that there need to be a shift from a traditional method of giving mandates to the method of using your mobile to drive the business.
Very interesting. Uchenna is an FX trader, managing partner at BlueFX Nigeria. Uche, I'm sure when you talk about the younger Africans who are interested, FX trading, online trading, investing in Nigeria is catching up across all platforms. What's your experience on the FX side, very quickly?
Yeah, I can agree with Ayodeji on that front. Having the introduction of mobile apps and other on-the-go sort of infrastructure, digital infrastructure, sort of help the younger populations to sort of attack the market as they do other things. They don't want to get caught up sitting down trying to log into a computer while they can do one thing and do another thing at the same time. And very interesting, we would have to reference what is happening in the US right now. The broker called the Robinhood that has sort of created a zero commission free for the youthful generation in the US. And that has seen a lot of influence in terms of liquidity injection from those younger population. In short, it has been really, really researched and sort of reported that the younger population are the ones sort of driving market prices at the moment right now. We can see a lot of bankrupt bankrupt companies right now even appreciating in their stock prices because these younger generations have the access to this market and they don't really understand what these things mean. They just want to buy low and sell high, and that's what we are seeing right now. So a bit of introduction of all this mobile app and digital infrastructure on the go can help the younger population. And I think, yes, if we continue to expand on that infrastructure, Nigeria will see more influx of the younger generation into the space.
Very interesting. Myself and Ali, I think we're technically out of that group as we speak. We're one of the old dinosaurs. in the business. So that leaves Ayodeji and Uchenna to get on the gravity train, as it were. But Ali, let's talk about some of the corporate news in the eastern markets. The CIC, the Centum Investment. In Nigeria, we had UBA, PLC, and a few other banks that have paid down on their external bond exposure ahead of time. Why is Centum Investment doing this? Is it exchange rate? Is it interest rate? What was driving this sentiment of this early repayment of outstanding debt portfolio?
So the debt was 6.6 billion Kenyan shillings, which is just above $60 million US dollars, which they've paid down, just to give you a sense of the quantum. And I think for a long time, James Moria, the Chief Executive Officer, has been struggling with lifting the share price. The price earnings ratio is around 3.5, and they feel that the market is not valuing the share price appropriately. And I think part of the strategy was to reduce interest costs, but also to free up cash in order to start paying bigger dividends, which would then in turn reprice and revalue the share price higher. And I think that strategy would be correct. You know, James has been there about a decade. He embarked on a high growth strategy. He's executed with a lot of finesse. He's got in, he's taken on big risks, he's got out again. To give you an example, there's a Two Rivers development here, our biggest shopping mall development. He got in at a bargain basement price. He sold off 50% to Old Mutual, and he banked a great deal of money. And there have been several of these types of transactions. I think what he was really looking to do was, one, reduce interest costs, but two, also to now make it a catalyst for a repricing and a reappreciation of what he's trying to do by the markets. I think that's what was the strategy behind that move. You then mentioned CIC Insurance, which is one of our insurance companies, which appointed a new chief executive officer, ex-banker. CIC, interesting, indigenous insurance company. There have been a lot of international entrants into our market. It is not one of the biggest. Capitalization is around, I think, $50 million. But interestingly, they're also selling a huge bit of land they've got in order to release cash. But for now, the insurance sector has been under a little bit of pressure. They tend to hold a lot of equities, underperforming stock market. And of course, for now, it's a very competitive business in the insurance space. And then finally, we had a profits warning from Longhorn Kenya. Longhorn, to all of us who are, dinosaurs will remember that name. It's a brand education name. Longhorn Kenya, big in education, big in student textbooks and so forth. They issued a profits warning talking about COVID. They are trying to pivot to digital, but like a lot of the businesses in the media that are pivoting to digital outside the US, and outside the New York Times and the Washington Post, which have made such a tremendous pivot into the digital space, these businesses have not made it yet. So essentially a profits warning, but I think an interesting share for the medium to long term. There's so many, we were talking about the young population. What do they all need? They all need to be educated. And increasingly we're seeing different delivery channels being brought to bear. And I think Longhorn can ride that wave. But for now, profits warning. The market is priced on a price earnings ratio of 7, trailing price earnings ratio. So you're looking at 9, 10 once those results come out. But I think, you know, this is one that people might consider tucking away for the medium to long term. Center have a big stake in here as well.
A very interesting coverage of the footprints there in the Kenyan market. Ali will touch a bit on the Southern African markets in a little while. So let me just stick around the earnings season here in Nigeria. Bua Cement, one of the top 3 largest companies on the Nigerian Stock Exchange, yesterday announced a very profitable Q1 2020 earnings before interest, taxation, depreciation, amortization, was called EBITDA, was up about 16% to 21 billion naira. Net profit came in nicely, 19.7 billion on a year-on-year basis. That's up about 4 billion over the same period last year. Earnings per share, 58 kobo on the upside. That's one big story. In Ghana, the market lost about 0.5%, dragged by Guinness Ghana and Republic Bank. Meantime, in Ivory Coast, the BIVM opens the week a little bit weak, as you heard earlier, about 0.07%, less than 1/10 of percent. In Cameroon, Afriland First Bank, one of the largest commercial bank, posted a 1.150 billion RFCFA for full year 2019. We just need to bring this also into our coverage. But let's stick with the Bua Cement. Sorry, Ayode Jebo. Drill down a little bit of this earnings for us, but more importantly, the cement market in Nigeria. We've heard from Dangote Cement for Q1. Now we have its main rival, Bua Cement. Ayo.
Yes, it's interesting. It was an impressive Q1 2020 result from Bua Cement. Bua used to be acquired CCNN and listed as Bua on the Nigerian Stock Exchange. Part of what we saw that boosted the top line was the increase in the volume. There was a 20% increase year-on-year in volume to about 1.3 million metric tons from about 1.1 million last year. If we also recall, there was a new plant that was commissioned in Q2 last year. So the year-on-year jump can also be attributed to the low base effect. About 3 million metric ton capacity was launched last year, and that boosted their top line. And based on the current capacity utilization of that new plants, about 66%, which we can say is very impressive when you look at it vis-a-vis the border closure, and as well as some of the challenges we're still going through in the country. So we believe that there's potential for Bua Cement to grow. When you also look at within the cement industry, with this new government intervention, yesterday I think there was a news around the economic sustainability reports that government will be spending about 3.2 trillion. And out of that amount, the second largest allocation is to construction. And government is trying to insist on the use of local materials for the construction of the road. So if that is enforced, it means that there will be significant demand for cement. We can see what's happening on the Apapa-Bagada Expressway, the use of cement to construct that road. So if we begin to see more of that internalization of the use of local materials, beyond just driving the growth of these companies, it would also expand in terms of employment, to employment generation. Also, the demand for FX would also reduce. So you don't have to import some of those materials that will be used in developing the road. Yes, it's positive. Part of what lastly that I will mention on is housing. So they are trying to look how they want to focus on low-cost housing. Cement will also be required. So I think it's positive for that sector, and we should continue to see a major boost in their revenue on a quarter-on-quarter and a year-on-year basis.
Oh, thank you, Ayodeji. Now let's quickly try and squeeze in oil markets and commodities a little bit with the FX play.
As we speak now, the WTI is already down 2.2%, and that is also being seen in other risky assets as you see prices facing some level of downward pressure. We believe that this should sort of highlighting sort of temporary risk of sentiment today. The market is sort of trading at extreme technicals, saying highlighting overbought levels at the moment, and there is a huge material decoupling of fundamental underlying fundamentals and what price is actually saying. So I think it's too early for us to really conclude what this is. If this is a correction, then price would continue higher, or we are in the beginning of a second wave downwards, leg downwards. So yes, I think it is a price, an asset that we need to pay close attention to, and that in itself for us in the country, we don't want to see lower pricing because it's not in any way going to be in our favor, given the time right now that we are starting to kick off and sort of resume business and economic activity. A second wave leg lower in oil pricing is really going to destabilize our stability in terms of what the CBN is trying to do in maintaining the naira value against the US dollar.
Thank you. We're also seeing a lot of interest of a number of international airlines coming back, getting back into the skies. France is putting about 15 billion euros into its aerospace industry, and across board, Lufthansa from Australia across back to Europe. It looks like folks want to get back in the air tourism industry, reopening, and all of that. Perhaps that will help when more planes get back into the skies. That may help a bit of more demand from the oil sector. Perhaps that will keep oil prices around these current levels to keep countries such as Nigeria, Angola, Gabon, and a few others at least happy, help them keep minimize their fiscal deficit. So Ali, very quickly, let's touch on the Southern African markets. The JSE remained very strong as we spoke yesterday. The JSE, that's Africa's largest economy, largest market, was down slightly to start the week, but the rand continued to go very, very hot. Meantime, South African banks may see their steepest earnings slump in 5 years, according to PricewaterhouseCoopers or PwC. What's your take?
So really, as I was saying yesterday, the rand is, if we're in a risk-on atmosphere, everyone reaches for the rand, and we've had this tremendous rebound, which Uchenna was speaking about as well. And we've had this brilliant rally in the rand. If you caught it right, you made out like a bandit. But I, for once, kind of think it now looks overdone to the upside. And partly my reasoning is, just like that report you're mentioning about South African banks, the underlying story has become very disconnected from some price moves. You've got the South Africans going for their biggest request to the IMF. You've got the South African banks telling us, look, guys, it isn't rosy. And therefore, I, for one, think that the South African market now looks toppy. And if you were going to force me to do a trade right now, I'd be selling the rand. I wouldn't be selling the JSE as such because of the gold component, where I think gold prices will continue to go up because of this extraordinary money printing exercise that the Federal Reserve has embarked on, which is fundamentally, I think it's a liquidity trade that's underpinned the markets. And like Uchenna, who said a couple of sessions ago that he was concerned we could see a fallback in the oil price to as low as $20. It's easy to forget, Boasson, we were negative $37. You've had the most incredible bounce from negative 37 to close to $40. And I think that we should be cautious at this point in time. Demand, you were talking about airlines, you were talking about tourism returning. Look, it's behavioral economics. Who's going to London if you've got to self-isolate for 2 weeks, right? Who's going back? Are we going to go back to where we were just a few months ago? I highly doubt it. And I think we need to think about that more closely and about how much we're going to revert to what existed before and then take our positions based on what we're thinking there.
Very interesting, Ali. Let's begin to wrap up the show by taking a very quick look at the North African market. The Egyptian boasts the largest exchange north of the continent to start the current with year-to-date a negative 20.16% reading, gained 0.34% on Monday. On the earnings side, Egyptian satellites which is one of the listed companies, reported a 10.82 million Egyptian pounds net profit in first quarter. Meantime, Total Maroc, sticking with earnings still coming through from some of the exchanges on the continent. Total Maroc, which is an oil trading company on the Casablanca Stock Exchange in Morocco, says it's paying 56.00 dirhams local currency as cash dividend that to be paid to shareholders on June the 30th. So what do we have in other Frontier Africa news? A number of stories are coming through from across the continent, from other smaller economies, but some of the big stories have to do with Tanzania. The NMB Bank shareholders will also receive 48 billion shillings as a gross dividend from that company. Meantime, again, he is an EGM Securities partner to extend asset classes in Kenya. Quite a bit of this part of the news. We already heard Standard Chartered has a new CFO, a new chief financial officer for Africa and Middle East. Mohanty is taking office. That's already in the news, everyone. So if you have your footprints on the continent, these are some of the other stories making the headlines. So let's wrap it up on this note. Gentlemen, thank you so much for today. Uche Naminis, the managing partner and FX trader at BlueFX Nigeria. Thank you so much for being on the show from here in Lagos. Ali Khan Sachu, thank you, of Rich Management Limited in Nairobi, Kenya. And of course, Ayode Jebo, who is a CEO and a chartered stockbroker at Afrinvest Securities. Thank you, gentlemen. Have a great Tuesday. I will see everyone back tomorrow morning, bright and early, here on Frontier Opening Bell. I am Bosin Namafai. I'll see you again. Bye for now.